Welcome to Tim Stephinson from SherpaTech. We're very lucky to have Tim on, who is an absolute expert in all things, lots of different things from what I understand, but certainly the world of cyber insurance. So we're looking forward to getting your opinions and knowledge and all that sort of stuff. So welcome, Tim.
Thanks, Tom. Thanks for having us today.
Thank you. So tell us a little bit about yourself, your background, your history, and your organisation, SherpaTech.
So, personally, I started out in building and construction before I discovered the shining lights of insurance. But I did a lot of interior fit out construction work. We did distribution for a number of different companies' products, and we grew that business and sold it out to private equity group in 2016. And then since then, I've always loved technology. So I've done a couple of different management roles in some organisations that have used technology to really enhance their businesses. And it was sort of coming into the end of COVID, and I met Andy Bremner, the other founder, and we started SherpaTech, the insurance specialist for tech and IT. And now we look after all things insurance for tech and IT.
How did you get the name SherpaTech? It's quite unique.
Yeah, so Andy actually has another side to his business, Sherpa Insurance, which does general insurance for a wide range of industries. And, he's always liked the Sherpa mentality that they're the person that helps you get places, they carry your bags, they get you up the mountain, and do all the work behind the scenes to make you look good. So it's, we've carried that forward into the tech and IT side.
Yeah, that's awesome. So talk us through, so obviously you've been going for a while now and you would have seen, I'm flabbergasted how fast this particular niche and segment is moving in terms of change. Talk us through, and it might lead to, I imagine it'll lead to a number of questions, but talk us through some of the big changes you've seen over obviously we've had, COVID, put into all that mix in the last few years, and that's changed itself, but just the industry itself to huge amounts of change, right?
A massive amount of change. And the thing I love about technology is how fast it moves and how quickly things happen. And almost the polar opposite is insurance. So insurance is a very old historic product, and it's built on many, many years of legal precedent. And so what we typically see with professional indemnity, which is the protection for bad advice, that product's been around over hundreds of years, was originally through Lloyd's of London, and cyber insurance as a newer type of insurance has only been around about 15 years. And so the legal precedent that it's built on and the different providers are hugely varied and greatly different. And so we're seeing a very fast evolution of what cyber insurance does and how it does it. Just before COVID, there were some significant losses in the insurance world, and around that time, underwriters were losing, I think it was $1.20 or $1.30 for every dollar they made. So they were going backwards fast. So things needed to change. So the way they changed it is they reduced coverage and they changed the way that they provided their services. So we've now seen a lot of insurers bring cyber insurance in-house. Some of the big underwriters employ more technical experts than they do insurance experts. And this is all about trying to make their models more economical. We've seen a lot change, but one of the big things we're seeing now change in cyber insurance is what we call proactive cyber insurance. So instead of just waiting to get a claim or waiting to have a loss, we're seeing cyber companies or cyber insurance companies now offer services to actually help you avoid having a claim or having a breach. It's things they do complementary to the managed service provider market and the managed security service provider market still, and you've got to really understand that it's still playing that key role of insurance. It's the last line of defense. It's not something you hold to prevent something happening. It's to be ready for if it blows up to actually cover those losses.
Just talk us through that. It's an interesting point in terms of what's changed in the last line of defense type theory. What I've noticed with a lot of our clients have taken out cyber insurance, it's certainly become a lot more popular, and so it should, is the requirements that are behind cyber insurance. I cast my mind back not that long ago, and we'd have a client come to us and say, okay, we're taking out cyber insurance, and the questionnaire was a pretty short one, and now they're getting longer and longer, and obviously the complexities of what insurance is required is changes that as well, and the types of business and what have you. So there's a lot of nuances and variances there, but the underwriters from someone that is in the industry but not in the cyber industry, in the insurance industry, that I know, their requirements are becoming a lot longer and more extensive. Is that that's a true and fair assumption, Tim?
It is from some underwriters. I didn't understand a number of these factors until I started working in the trenches of insurance. And it's really quite interesting that particular underwriters, they don't all move in the same direction. So we might have an underwriter who's suffered a significant loss from a particular data breach or a particular vulnerability in software, and they'll care more about the questions relating to that loss than an underwriter who had no exposure to that market. And so we find then homes for things or appetite for different businesses in different areas just purely because of the way the market sits. And so, yeah, we're seeing, I suppose, some underwriters have definitely higher appetite for technology businesses where they actually have the technology in-house to understand those businesses better. So we've seen a lot of people pull back from the managed service provider segment, and it's purely because they've suffered losses, and so they put a red pen through all businesses that look like that because they think that those losses can continue. So it's not anything against the technology businesses. It's just that when they see a loss from a particular area, they try to exclude that area going forward until you can demonstrate certain controls that mean that they will assess that business with a different maturity or a different framework that then allows them to take on that risk again. So, yeah, and also if we can take something forward with any underwriter where we can show high maturity or maturity that might be over and above a business's turnover, that actually leads to better insurance premiums and more competitive terms from the market as well.
You literally led me into my next question, which was the maturity of organisations. A journey that we take our managed IT client, what we refer to as managed IT clients, where they engage us to provide a proper managed solution for support and solutions and obviously cyber. That is a very much a journey of cyber maturity. So we take them on in terms of if they come to us initially, we take them on the journey to go from here to here and then maintain it. And there's a lot of work that goes into it without boring everyone into the detail. But a lot of the things that we do, and look, I got to be honest, it's a pretty tough gig for us in terms of, selling it. It's these are things that are 100% required, but there's various levels of cyber posture and maturity as well. That's interesting to note that you've said that is important. So in terms of, say, for example, a client that hypothetically comes to us this week, we take them on that journey from getting them, and there's certain frameworks that we follow. For example, we follow the Essential 8 framework and the CIS controls out of the United States. So that is important to insurers, Tim, in terms of the maturity.
It is very important. And it's also important that somebody who understands your customer's business is actually taking their insurance program for cyber and their other insurance covers to the market, because quite often you need a broker who understands your business segment to explain it to the underwriters, because they're not always experts in your chosen industry, and they'll ask you a bunch of generic questions. But the biggest advice I can give your customers is don't just rely on answering those questions. Do more. Go above and beyond to explain away the posture. I know a number of your customers use Huntress as an example, which is a great product. We would say look at some of the exports that might come out of that to prove that your customers are well protected, and share that with the insurance providers, because then it goes full circle to actually proving that they have those controls in place as well. And also, one thing we talk about with a lot of our managed service customers is the proposal is the first sort of pillar of the insurance contract. So what makes up an insurance contract? It's the proposal, the policy schedule, and then the wording all wrapped together. And that's unique to every business. But the proposal is the one thing that you can influence and introduce as many, I suppose, or as much information as possible to make that policy as wide as possible. And if you're doing activities that are high risk, you want to make sure the insurer or the underwriter has properly assessed those and included them in your coverage. So disclosing as much as possible there is really important.
So it is important to go through a very thorough process rather than just tick boxes and hope for the best, is what I'm taking out of that.
And if you do just tick boxes and hope for the best, you will still get your insurance. It'll be a piece of paper that, says you're covered, but it's only when you have a claim that policy would be tested. And when it's tested, somebody from one or the other side of the argument might be sitting there trying to argue a reason why that policy may not need to cover the business that it's over. And so what we like to do is, if you have claim scenarios or areas of high risk, let's explain those to the underwriters and make sure that they understand the risk they're providing the terms for. You'll have businesses that work in the medical sector. That's a high exposure. Education as well. But there are steps you can take in those industries to still adequately manage the risks that they're concerned about, and it's sort of how you approach that from a communication perspective as well.
I'll give you a good example from a tech perspective, but not an insurance perspective. We've got a client, and I won't even mention the industry, but a very high risk industry in terms of the industry that they operate in. Highly regulated, and from a cyber insurance perspective, it would be just a nightmare to their cyber insurance. Now, juxtapose that against an organisation that we also deal with that's very early on in their journey in terms of a relatively new client, similar turnover, and we do see the outcome of policy and the cost of policy. But the first organisation, high risk organisation, they've been with us for quite some time. We show a very high level of maturity through systems and policy and process and audit and all these sorts of things. And the other organisation, early on in their journey, and they're not there yet. Their policies, funnily enough, turned out to be not too dissimilar in price and cost. So it obviously does make a big difference, right?
Oh, definitely. I mean, I liken some of the cyber world to my old world of construction, where you can have guys hanging off the outside of a building 20 stories in the air, and it's one of the safest professions. They have a very low, incident rate because they manage their risk really, really well. And so, it's just because something looks dangerous doesn't mean it necessarily has a high risk, and the other parameters that go with that as well. So, if you can show good maturity, good controls, and also I really like good vendors behind businesses as well that, can then clearly bolster out the team that you're bringing forward for technology as well.
Interesting. Just off the back of that, I want to touch base and show you a clip. For anyone that knows me, I'm a big fan of Warren Buffett and Ajit Jain, the famous investor, and his sidekick who runs his insurance arm. And at this year's Berkshire Hathaway meeting, they got a question on cyber insurance, and this is a clip. Ajit runs the Berkshire Hathaway insurance, so this is obviously coming from an insurer's perspective, so not a broker's perspective or what have you. And it's an interesting clip because obviously they're one of the largest insurers in the world, and Ajit is considered one of the best in insurance. And I just wanted to garner your thoughts on this and what you thought. Just have a listen for about a minute.
Okay, let me start. Cyber insurance has become a very fashionable product these days. Over these last few years, it is at least a $10 billion market right now globally. And profitability has also been fairly high. I think profitability is at least 20% of the total premium has ended up as profit in the pockets of the insurance bearers. Now, having said that, we at Berkshire tend to be very, very careful when it comes to taking on cyber insurance liabilities. For two reasons. One is it's very difficult to know what is the quantum of losses that can be subject to a single occurrence, and the aggregation potential of cyber losses, especially if some cloud operation comes to a standstill. That aggregation potential can be huge. and not being able to have a worst case cap on it is what scares us. Secondly,
so yeah, as you can see, that one of the largest insurers in the world is a little bit hesitant on cyber. Talk us through the players in the market in terms of underwriters, and are they increasing? Obviously, they're pretty scared, but obviously they're a traditional insurer who's quite risk adverse, from what I understand. But what's the situation in terms of options out there? Is it limited? Is there plenty? What's the situation in Australia like?
Yeah, so it was about 2 years ago. It was a hard market. It was premiums were rising and players were leaving the segment due to the losses that he was sort of sharing there. But in the last 6 to 12 months, we've seen a number of new players enter the market. And those new players are entering with a very heavy technology focus. And this is what I was talking to earlier about proactive cyber, where they're using tools to connect into your tenancy or run endpoint assessments using products like UpGuard and others to then basically know what your security posture is or know what your exposure is. And they're pricing their risk based off those metrics instead of asking you 57 questions on a form and then leaving it for you to get those answers correct. They're actually doing an endpoint scan and saying, hang on, we know what the vulnerabilities are. They're doing a deep web credential assessment and saying what is out there that we know is exposed. And I think those policies are enabling more capacity to come into the market and enabling greater protections for the people holding those policies as well, because if you leave it to a business as a small SME to complete their own cyber proposals without a technology professional in the room, they might get some of those questions wrong, or they might have the wrong configuration. Whereas if a company has done an endpoint assessment, the assessment's on the company who's done that coverage. So then they're covered for those services. So yeah, we really like those tools, and I think they're making it easier for people to get cyber insurance as well.
Those endpoint assessments, Tim, that you talk about, how often would they be run? Is it a quarterly thing? Is it a time of sign up?
Yeah, so
how often would they need to go in there?
So initially they're run at time of sign up. There's a couple of different providers. So Coalition is one that will connect into your tenancy once you actually hold a policy with them. And the advantage of that is then they can see real-time exposures across their network. So they're a US-based organization that, I think they had 80,000 customers at last assessment. And so if they have, let's just say, a new vulnerability that's introduced from a Microsoft patch, they'll see businesses suffering those losses very quickly and then can alert the rest of their networks. So and that's a way for them to mitigate their losses and not see that type of exposure that Berkshire was talking to there as well. It's also cyber insurance isn't just one type of cover. There's a lot of different insurances that group together under that cyber insurance banner. So it's important to look at, when we're talking cyber insurance for SMEs, we're really talking an incident response service with a bit of legals, a little bit of crime and social engineering included in there as well. And so even in Australia, between a number of different underwriters, we see very differing levels of coverage. At the bigger end of the market, it's less about the incident response service in that sense and more about the legals, fines and penalties and other areas of coverage that businesses need. So yeah, you've just got to unpack, what are you actually holding insurance cover for, and what do you expect it to do in the event of a claim? Quite often, a mature MSP's customers should have a good incident response plan. They should have good vendors from a security standpoint ready to respond to an incident. They should have done their tabletop exercises, and insurance then has to play a role in those. But it's sometimes not always the lead role. But with a smaller business, the insurance team potentially will provide the lead role because the MSP might be doing the operational technology side, but they will have drawn a line under an incident response. If it's Australia Day, you need to call your insurer. Don't call my response team in the plan. So it's important to understand the right fit and the right configuration for the right business.
Interesting. Just getting to a specific, and you may or may not know the answer to this, or maybe I'll just speak broadly to it, but a few weeks ago there's been, and this situation that I'm about to describe can happen and has happened in a number of industries where a hospitality technology provider has been exposed in terms of their systems. They've had a breach. Personal identifiable information has been accessed. Now, as a patron of organisations, they've, a patron's supplied their driver's licence or what have you, identification to an organisation, and then that's been passed over to a third party. I had a lawyer on last week and spoke about that, and that's coming up soon. But which provides a legal explanation to the steps around that. But from an insurance perspective, is there any type of insurance that provides you with some coverage? Because you even look, our business as a technology provider, we're reliant on a huge amount of providers. You mentioned, Huntress, but the list is a mile long. And every business has these, everything's as a software as a service, a subscription model. For those that don't know what that is, it is, we've all got them, and we all pass along our information, the business information, our clients' information. It's one thing. So where I'm going is, it's one thing for us to have a breach and we've got insurances and those sorts of things. What happens, Tim, in the instance of cyber insurance and one of our providers having that? Obviously, from a patron or from a customer's point of view, they say, well, I handed my information over to you. You're the one responsible. Does it provide any coverage, or is there any limitations?
Yeah, so it's a really good point you raise, and as soon as we start to talk legal, I always have to caveat with, we're not lawyers, and insurance gets very legal very fast, and what we typically find is insurers have the ability to push different claims through different policies depending on the nature of what they're seeing at the time. So the scenario you're articulating there can fall into professional indemnity or the overlap between professional indemnity and cyber. Because if a provider was delivering services to an organisation, professional indemnity is the protection for bad advice that can lead to financial loss. And so you need those two factors to occur. You need the bad advice or perceived bad advice, and you need some financial loss to then be covered. And we typically see that a lot of professional indemnity policies have cyber exclusions. I know it sounds to get very complex very, very quickly, but it's important to understand the legal protections that sit behind that. So the contracts for engagement, and also the definition of whose data is it and where is it sitting, because in many cases you can have co-managed environments, and we defer to the Privacy Act in this case to sort of look at who's responsible for the data. But the thing that I suppose I come back to in this scenario is, if you're dealing with a business and they've got a particular area of concern, we actually like to take that to the underwriters and seek their clarification on it. We had a particular provider with the medical industry where their client was pushing for them to take accountability for all the PII records that they were holding, and the insurer took a very different view. And so what they were able to do with that was go back to their client and negotiate and say, we can't provide insurance for this particular configuration. You have to acknowledge that the data that sits on your servers is your PII, and that is your responsibility, and you should be holding the adequate, incident response protection so that if they get breached on that side, their insurance triggers, not the technology provider. And so breaking out those scenarios, and again, having it clear in the incident response plan. In this case, if the incident occurred in the co-managed environment with this cloud-based, there was a joint responsibility there. But if the breach had occurred on the on-prem servers, that fell very much into the client's infrastructure, and their policy needed to trigger that response. The good thing about that scenario was we unpacked all of that before there's been a claim. So in the event of something coming to fruition, we've got the records and the data trail to go back to those insurers and say, this is what all was almost pre-agreed of who's responsible, and that speeds up the incident response as well.
I think it's important that you've got to, and we spoke about this, and you can watch the episode with a very very knowledgeable lawyer, in that you've got to be aware of who you're doing business with, in terms of, well, obviously we're aware of who you're doing business with, but how and where the data sits and who's responsible, and the protections put in place. More often than not, we're doing these agreements, and there's organisations we're providing information with for, and it's everyone gets provided a list of terms and conditions. Who actually reads them, and are we knowledgeable? I really encourage our clients to come to us and say, let us do some work just from a technical perspective to make sure you're comfortable with what is happening with data flow and where data's sitting and the protection of things. It's really, really important, and not enough people ask us. And I'm constantly saying, tell us, we're happy to give you some advice.
I mean, again, back in my construction world, we were always very big on calling out what is in scope and what is out of scope, and what are we being paid to do and what are we not being paid to do. The risk of being assumed liable for data protection is very, very real, because people say, well, you built the box and put my data in it, therefore you're responsible. But, in many cases, that's not the case. So, both client and provider need to be very eyes wide open on that. Also, if you have one of those examples, share it with the insurer and bring them into the conversation as well. All the underwriters I speak to are very happy to actually have more knowledge, because if they have more information, they can price the risk more adequately. And then that leads to, more certainty if you do have a claim.
Yeah, very interesting. Very interesting. Just a quick question, Dex, before you ask your question. What are the things that, apart from systems, good providers, what's your view, Tim, on written policy and compliance and audit type documentation? We're seeing, not necessarily from an insurance perspective, but and another thing that we touched on last week was a lot of even big clients have had requirements from third-party auditors, and their suppliers and customers are requiring them to comply to a certain level of security, and they're very big on policy. We're seeing smaller organisations now very reliant on it now too, because they might do we've got someone that is only a few people, and they do big contracts with Google, and they're doing marketing and what have you. So, and they're getting asked for all this stuff. It's like, whoa, it's a lot for a small business. What's the formal documentation? When I say policy, I'm referring to information technology processes and disaster recovery plans and all those sorts of things for people that don't know what it is. How important is that in the mix of
very, very
insurance?
Important. It's something that predominantly exists as a tick box in most insurance proposals. So they'll say, do you have quality and procedures in place or written procedures? And you tick the box saying yes. But there's an opportunity there to actually share advanced or additional controls and any formalization of that as well. So aligning to frameworks like NIST or CIS, in addition to ISO 27001 and even 27001, we now see that being an uptake of smaller businesses using that as a standard as well. It used to just be, 5 years ago, that was pushed for larger organizations. But as more and more contracts need, I suppose, alignment of process and procedures, that's a good way to reduce that exposure as well. And in addition, you get many other business benefits from it as well, from consistency of service and consistency of outcomes as well.
It's one thing to have the policy, but there's another thing to have a policy that wasn't just downloaded off the internet and Control F replace, which is, a lot of people come to us and say, can we have these policies? Can you send them to me this afternoon? And I'm always very hesitant, because any monkey can go onto the internet, download a policy.
I went through a very similar thing around the sort of early 2000s, when safety compliance was becoming a massive area on job sites. And we saw it explode from just having a simple, safe work method statement to full job safety packs and site-specific everything. And, we saw people switch off using metal ladders on sites and, all fiberglass ladders and all these different things. And we saw a normalization of it, where it then pulled back a little bit as well. And there was more a focus on people understanding the policies and procedures and not just pumping out large packs of paper to get people to sign to try and tick the box, and really bringing the employees into a conversation on those processes as well. Because I think once everyone that works in those areas understands the reason why and the benefits you get as a business, it's a big risk reduction. And if you have a culture that enables people to work effectively with those processes and procedures, it does lead to, I think, a lower risk of cyber incidents. Staff training now is a huge requirement for cyber policies as well. Formalization of, patching, because we see so many vulnerabilities exist through patches not being followed. I still hear people say, "Oh, I don't update because the latest update, could cause me a problem." It's a view from 10 years ago, but these technology kind of things seem to, have a life of their own sometimes. So, yeah, following the right frameworks is important.
Tim, Tom mentioned a data breach a couple of minutes ago, and I think the public only sees those very big data breaches and ransomware attacks and all that sort of stuff. In the time that you've been doing this, have you seen a rise? Is it hockey stick sort of growth in terms of the number of claims that are being put forth through cyber insurance?
We've definitely seen a lot more claims in the last couple of years, but the businesses are definitely becoming more aware that, it used to be uplift in cyber technology or insurance. Now businesses have very much moved on from that. It's not an either or. They very much need to have cyber insurance to provide the incident response and the coverage post a breach, and they still need to have that uplift in technology. But I think everyone's a bit, cyber fatigued. There's every day there's another breach. The figures are astronomical, but I think the SMB sector is the one that we will see the biggest uplift in the next couple of years. The challenge is the Privacy Act, which is due to be updated later this year. The recommendations there to remove the $3 million cap for businesses to comply with the Privacy Act. Doesn't look like that will flow through into this year's updates, but we definitely believe it's coming. I think the challenge is around how does a government uplift so many small businesses to comply with a framework that previously they haven't had to. So it'll be interesting to see what the government leads with in the next sort of 6 to 12 months on the cyber side. But I think insurance is a great way to deliver those services when you need them. So an average policy for a business turning over, a couple of $1 million, equates to a couple of $1,000. And the damage in some cases, they're business killing events when a business gets hacked or breached.
Yeah, interesting. I think that the easiest option, Tim, is come and see us for a good cyber posture, and then we can lead them into the direction of Tim to get the relevant cover and make sure you're protected. Right? I think that's the easiest, because where I was going is it's so dry and people glaze over, and rightly so. It's like, I don't know any of this. Where do I start? And it doesn't need to be like that. So I suppose the next question is you need to engage a really good IT provider that does have very stringent standards and is taking you on a journey, because it's not. Another misconception from our perspective is you're a business, you need to do something about cyber insurance. It's not just we go from here to here and it's done.
Yeah.
It's like daily, it's constant. We've only got to turn around. You mentioned patching a few weeks ago, major vulnerability in Chrome, and then, everything needs to be patched that day. It's not a set and forget. Talk us through the process of taking out insurance, and, obviously if you've got the right person on the tech and the right person on the broker side, it helps, but what's the process?
Insurance from a business perspective isn't necessarily as straightforward as car and home and motor insurance. So, the personal insurance world is so online now. It's so easy. The cyber insurance and professional indemnity and business insurances, while there are online offerings, we typically find that underwriters who actually look at a business and unpack it will deliver a better coverage and a better product. We still do have businesses that sit below the $2 million threshold, and we'll push them through an online platform where we know the cover is right. But it's really important to articulate, what do you need cover for first, and then apply the right mitigations. Sometimes it's contractual as well. We're seeing a number of large organisations push cyber insurance onto their customers and putting a minimum level on that, almost as a cheap way to uplift their compliance. So if every business you deal with is now mandated to have a certain level of cyber insurance, you're then pushing a set of requirements onto them by default that uplifts the posture around your organisation. Again, having then reducing your impact of having a breach if your businesses that you connect to are more compliant as well. And then traditionally it's still a paper-based form. So that's just something that gets filled out, marketed around, and prices come back.
Got a couple of hairy ones for you, Tim. You mentioned prices. So premiums after a claim has been made. How is that affected? How much? Because a claim could easily run into the six figures, even for small companies. Bitcoin and all of that sort of stuff. So, you mentioned before that $3 million, it could be a couple of $1,000s for a premium. In the event of a claim, what happens after that? Is it almost untouchable?
We do see businesses post-claim being reinsured, but you're right. It is a significant uplift typically. We also, will advocate that cyber insurance is something you never want to claim on. If you can mitigate these risks and have the appropriate triggers in place, you should have a framework that allows you to hold cyber insurance to protect the business in the event that something goes very, very wrong. But it's not it's not like claiming on your car and you get a payout and you move on to the next one and it doesn't really affect you. It is a very horrible process to go through, and the rebuild is equally as challenging. But the mitigation or the coverage there is there to get you back on your feet and rebuild the business. But yeah, there is an ongoing cost uplift.
Another hairy one. Are the premiums affected by crypto at all?
We definitely see. So crypto exposure or crypto jacking is something we have seen coverage for in most policies now. So we've seen people have their virtual environments breached, and then somebody spins up a crypto machine in their Azure account. That's exposure, and those sort of areas do have pretty standard coverages now for them. But again, you'll need minimum MFA and other areas. But yeah, it's there's a significant exposure for a lot of businesses is in crime and financial loss, especially coming from social engineering or business email compromise. And those are quite expensive covers to get. And so what a good policy will typically do is sublimit those. So you might take out $100,000 of crime and social engineering to cover in the event that an accounts department pay away a particular amount of funds, but you might hold a $2 million cyber policy and then, the $100,000 of that is sublimited for those areas of higher risk. But that's all about crafting the policy to match the business.
Just to expand on both your comments, what can happen for people that don't know is that if you've got an Azure subscription, which is basically public cloud, and you got hacked, you could run up virtual environments that mine crypto. You could just go on. I mean, I've seen people either through fraud or through accidental misconfigurations, all of a sudden be generating multiple, tens of thousands, hundreds of thousands of dollars of usage in Azure and AWS. It happens. And obviously it's malicious as well. And that's where that was going. So I just wanted to clarify that because it's not, you're not just limited to, personal information or your own data getting things. If you've got systems in public clouds or clouds that, have the ability to scale, that's where the risk is true. And I imagine that was where you were going with that, Tim.
Yep. I want to just stay on the crypto front just for one more question. I know this probably isn't the case, but do premiums ever go down as a result of, say, Bitcoin halving in price? Like it's 75,000, I think, at the moment, but at some point it was as low as $5,000, even less. And that could happen in the course of any 1 year. And most of these ransoms are getting paid through Bitcoin. So does that affect the premiums at all?
We don't see a lot of ransoms being paid in that sense. They are in some cases. But yeah, I definitely haven't seen a correlation between the Bitcoin price and premium amounts. But we are seeing, premiums in some cases come down by improved security. And I think that's the big link that we like to, put in there when it comes to price.
Wonderful. Well, I think we've covered all the big areas. We'll probably get you back on at some other stage, Tim, to dive a little bit deeper into some of these areas. It is something that we really encourage people to, obviously contact us and lift the posture. You wouldn't even want to look at taking out cyber insurance without talking to a professional IT services provider to take you on a journey you've got to have this stuff in place. But talk to someone like yourself, Tim. How can people find out about you and your business? And obviously Sherpa. I wouldn't imagine, mate, there's too many others out there called SherpaTech. So you nailed the name. But
so
tell us where people can find you.
SherpaTech.com.au, or I find myself and my colleagues on LinkedIn as well. But yeah, we're Sydney based. We're usually in Brisbane and Melbourne every other month. I was over in Perth 2 weeks ago as well. So we get all over the country, and we're happy to help any business that would like to have another conversation about how they can help reduce their risk as well.
Yeah, wonderful. Appreciate your time and your knowledge, and it's a pretty dry topic, but I think on the same token, there's a lot of people that are interested in. I personally cast a lot of questions on it daily and weekly, and rightly so. People are aware that they have a risk there, so
it's great
start a
that you guys are
conversation,
doing,
and we can point you in directions
webinars as well, because we typically find education is one of our biggest advantages, and if we can help people understand topics like insurance, then they can actually use them to their biggest advantage, and appropriately apply them. So yeah, happy to help, and thanks.
It's not as big and scary as one may think. So if you've got the right people in your corner, right, it's like a lot of things. I believe that if you've got the right people in your corner and specialists, it's not scary. It's often more than not, as you said, it's not as pricey as one may think. And even if you are in high risk areas, there's ways to minimise that. So again, thanks very much. Looking forward to talking to you again soon, and we'll have you back on to
Thanks a lot, guys.
dive a little
Appreciate
bit
it.
deeper.
See ya.
Thanks, Tim.
Thanks, Tim. Thanks.
See ya.